When it comes to life insurance, it could all feel very confusing. And in fact, there are many myths associated with life insurance and who needs it and who doesn't. And today we're going to debunk 5 of them. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
There's a lot of misinformation out there when it comes to life insurance, and a lot of conflicting, what we would call opinions when it comes to life insurance on what's the right way, what's the wrong way, what's the best time to buy, and when don't you need it anymore.
The first myth is, I'm young, single, and healthy. I don't need life insurance.
Well, that's quite the statement, right? Because when you're young, single, and healthy, that's when you have the most cash flow to afford life insurance at the end of the day, right? Number 1, cash flow. Number 2, health, which is something that we can't get back. And number 3, that young age is going to keep that premium as low as possible. In fact, you're never going to be younger than you are today. The life insurance is never going to cost less than it is today. And that's especially true for whole life insurance, right? With term life, you're locking in that death benefit, you're locking in that health, but you're only buying that term for a limited amount of time. With a whole life policy, you're able to build and accumulate cash value within the policy. So it in sense could be kind of like a savings account, right? Building up a pool of cash that you have full liquidity, use, and control over now, and then one day that death benefit is going to go to someone, regardless of who.
Yeah, and they always say that you pay for life insurance with your money, the premiums, but you buy life insurance with your health. And so the best time to buy life insurance is when you're young, single, and healthy, because you have the health, the premiums are lower, and you probably have the disposable cash flow before you get married and have kids. So right there, we've debunked that myth that you shouldn't buy life insurance if you're young, single, and healthy.
Let's dive into myth number 2. Life insurance is expensive, especially whole life insurance, right? How often have we heard that? But when it comes to whole life insurance, there's a gross cost and there's a net cost, right? So the gross cost is the amount of premium going out every month, right? And that's determined by your age and the cost of insurance at that time. But then there's a net cost, right? The premiums going out less the cash value accumulating within the policy. And over time, we know that that net cost is often zero, especially when you're working with a dividend-paying, mutually owned whole life insurance policy company.
Yeah, and that's a great point, because whenever I speak with somebody and they say, whole life insurance or life insurance in general is expensive, my response to them is usually, do you mean price or cost? Because there is a difference. And to your point, Olivia, the net cost could often be zero over time or be a positive instead of an ongoing expense.
Exactly. And it takes the foresight to see that. But especially the way we design the policies for that cash value accumulation, we have 2 things to consider here, right? The insurance company is making 2 promises with a whole life policy. The first promise is to pay that death benefit out when the insured dies anywhere along the way. And the second promise is to have a cash value equal to the death benefit at the age of maturity, which is typically age 100 or 121. So what that means is the insurance company is contractually obligated to build up the cash value within the policy. And your only obligation is to pay that fixed premium every month or year. This brings us to our 3rd myth. I only need life insurance until the age of retirement or age 65, which we come across a lot, right?
Yeah, and that's a great point, because now we're dealing with a lot of folks in their 60s. And, think of it this way. If you're unsuccessful at saving money or accumulating assets, you probably have children and grandchildren that you want to leave something to. And if you don't have life insurance and you haven't accumulated enough assets, there may not be anything that you could leave as a legacy.
Yeah, and that's a great point, all right? Because you're with life insurance, you're buying discounted dollars, right? So you're paying less for the death benefit by paying those premiums, right? No matter what kind of policy we're dealing with. Maybe not universal life, but for a term life and a whole life, for sure, we're paying less in premiums than we have death benefit. And so there's no less expensive way to guarantee a legacy for that family than with life insurance.
And then the other type of person is the person who's been very successful at accumulating assets and wealth, and they probably need life insurance to pay the taxes that their family will have to pay in order to inherit the assets. So you're either going to have an estate size problem or an estate tax problem, both of which can be solved with life insurance after age 65. But here's the deal. We always say that life insurance is probably going to be one of the best assets you own at age 65. But the trick is you need to buy it at age 40 or 45.
Exactly. Thinking on that even further is, at the end of the day, at age 65 in retirement, the cash value in your policy is actually the most valuable dollars that you have in your portfolio a lot of times, right? So we have the retirement savings that are 30 to 50% less than what is actually there because of taxes, you know, whether it be income taxes, Social Security, Medicare, all those taxes. And then also, if we have a stock, a non-qualified account, we have taxes to worry about there as well, right? So the life insurance cash value is accessible tax-free through the loan provision, and as well as all of those premiums you paid in with after-tax dollars are also accessible on a tax-free basis.
Exactly. And I think just looking at it from a practical perspective, one of the things I found is that my clients who are in their 60s and 70s, they don't want to get rid of their life insurance. They want to buy more. And so that myth that you don't need life insurance after age 65 is exactly that. It is a myth, because maybe you don't need it, but I can assure you, when you hit 65, you will want it. Mm-hmm. And again, the key is, if you have it for 15, 20, 30 years prior to that, you don't have to make that decision. You already have it.
Myth number 4, life insurance is a lousy investment. It has a terrible return on investment.
And we get that a lot. And here's what I always say. Life insurance is not an investment. If you're looking to compare life insurance to an investment, you're comparing apples to racing cars. At the end of the day, you're looking at comparing two completely different things. I would contend that life insurance does so much more for an individual than an investment that it's actually an insult to life insurance to compare it to an investment.
Exactly. And investments inherently have risk associated with them. And with the whole life policy designed for this cash value accumulation, like we talk about, there's not risk associated with it. It's a contractual guarantee between you and the insurance company. You pay the premiums, you put those deposits in, and the insurance company upholds the rest of the contract, which really has so many more benefits. But life insurance isn't necessarily a cool, sexy investment. It's something that's stable, and it's something that's guaranteed, and it's something that's there to help you grow and achieve your goals throughout your life.
And think about what investments do. Yes, they can grow faster, for sure. But, you can't put a price tag on having access to money when you need it most. What if you have a medical emergency and you need to access cash and you have money invested in a stock that's running away? Well, maybe that's not the right time to access that or sell that stock. Wouldn't it be great to be able to access money from your life insurance to get you through the emergency so you don't have to liquidate your valuable investments at a time that's sort of inopportune.
Yeah, and that brings up another point is you're able to access that money for whatever you see fit, right? So if an opportunity comes up where you see a stock running away and you want to get in on it and buy low and sell high, you have that opportunity because you have complete liquidity, use, and control of the cash value within that policy, where you're able to borrow against it with no questions asked, get your hands on that money, invest it, and then once the investment's good to go, you could put the money back in your policy when you're ready. Myth number 5, you should only buy term insurance because of that cost of life insurance, that cost of whole life insurance.
Yeah, and we get that a lot, right? So then what people are saying is, well, why don't we just buy term and invest the difference? Well, that may work or it may not. We don't know because we don't know how the market is going to perform prospectively. It may do very well or it may not. And here's the thing, even if it works to buy term and invest the difference, in order to access that money or to have that money in the investment, you're subject to market losses, you're subject to taxes, and you might have limited access in order to get at that money. So, could you buy term and invest the difference? Yes. Can it be better than whole life? Maybe, probably. But are you willing to stake your future on those possibilities versus staking your future on a certainty?
Yeah, a lot of studies have been done with the buy term and invest the difference. And what they found is actually that most people will buy the term insurance at least, but they won't invest the difference. And that's why that typically is a myth and it doesn't work for everybody, right? Because everybody's not as disciplined as they need to be to actually invest the difference. So when it comes to life insurance, we know that there are several myths out there, and I think we debunked a few of them. But if you have other myths, certainly comment them down below. We'd be sure to do a second video on this. Also, if you like this video, be sure to give us a thumbs up and don't forget to subscribe. Also, if you liked it, check out these two. We picked them out special for you.
Thank you so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.